What's going on, guys? My name is Jeffrey Rodriguez and welcome to another video. If you want to learn how to trade Forex using technical analysis and price action and all kind of other Forex related stuff, make sure to hit that subscribe button and that notification bell icon so you don't miss anything. So I get asked all the time, what can I do to find 10 pips a day? What can I do to find 20 pips a day? What can I do to find profitable trades every single day and, make a consistent amount of profit by this day or at this period of time? And first off, I want to start this video by letting people know that having expectations to find 10 pips a day, 20 pips a day, 30 pips a day as a beginning trader is not practical. So you have to also be practical, right? So this is a new skill that you're learning. This is something that you haven't really spent much time to develop in. So you can't expect to immediately understand how to find 10, 20, 30 pips a day like you see other people on, social media or things like that are doing. People that have been in the industry longer will obviously see, success because they've put in the work. Right? But if you're a beginning trader and then you're looking at these other people and you feel like, you should be where they're at, you have to understand that, at some point in time, they were where you were and they went through a process in order to get where they're at now. And, a lot of new traders have these expectations that, once they find someone that can teach them trading, all this stuff, that they can point them in the direction of a video or a book or an audio book or something that will teach them how to trade in, that short format. And it doesn't work like that. So you can't just be sent a video or a book and then immediately learn how to trade the next day. It absolutely does not work like that. With trading, it's more of an emotional thing than anything else. So you have to battle with your emotions. And oftentimes when you're trading, what'll end up happening is you'll do your whole analysis and you'll expect this specific thing to happen in the markets and it'll end up happening. But when it becomes time for you to actually take action on that specific thing, you start questioning things in your head. Can I trust this? How do I know if it's going to continue higher? It's like you forget everything that you just did in your analysis. And this is what I'm sure most of you, if you're a new trader, struggle with. And it's a very simple fix and it's a very simple answer. It's just due to lack of chart time. So what do I mean by that? It means lack of time spent in the charts looking for setups and how you would actually act on those specific setups. So with all that being said, guys, we're going to go ahead and we're going to jump into the charts. I'm going to show you what you should be doing specifically. So I know I tell you guys all the time, look for this, but I don't actually show you in the charts, this is how you should be doing it and this is how you're going to learn. So most of you, will probably watch a video and feel like, oh, okay, I'll just keep watching videos and I'm learning, but you're not implementing the information that you learn. So I always, tell people after you watch a video, you want to go spend double the amount of time you watch that video in the charts. So if you watch a 30-minute video, you have to go spend an hour in the charts looking for specific things that you learned in that video. Otherwise, if you don't do that, you're not going to retain the information that you learned in the video. And that's what I did as a beginning trader. I would just watch a ton of videos and I felt like, oh, okay, eventually I'll learn whatever it is that these guys know. It doesn't work like that. It's very simple. It comes from the amount of time that you put in the charts. Trading is a very independent thing. So you as an individual have to interpret the charts in your own way. So I'm going to go ahead and move into the charts now, show you guys how I interpret it and what you can be doing after you watch these videos to actually implement in the charts so you can learn the best. Right now we're looking at GBP USD and I'm just going to use this as our example, and this time frame that we're within is August of 2017, so about a year or so ago. And I just found this little portion of price action because I felt like this would be relatively easy for us to talk about and for you guys to be able to identify these 20 pip setups based off of this portion of price action here. So again, remember, trading is a very individual thing, so I'm going to interpret things about the market maybe differently than you would, but the whole point is for you guys to take these concepts that I teach and talk about and actually implement those into your trading. So whether or not you see see it the same way that I do, it doesn't matter. It's just a matter of using the concepts, because the concepts are what works, right? I'm always going to trade different than anyone else, and everyone else is always going to trade different than me. Everyone just has their own style of trading. So first thing you want to do when you're looking for 20 pip setups is the primary thing that you have to remember is always start with a higher time frame. So you can't start with a 15-minute time frame, do your whole analysis, and expect to be right every single time you take a trade. The way that you're going to become more consistent in your trading is focusing on the higher time frames. So what I mean by that is you have to focus on the direction that the higher time frame will move in. So if the market is making higher highs and higher lows, indicating that you're in a bullish market on the higher time frame, then you're going to want to be looking for buy setups. If the market is indicating a bearish market by forming lower lows and lower highs, then you would want to be looking for sell setups. So let's go ahead and look at this market here, and let's just go ahead and identify, from this portion of price action way over here all the way over here, what kind of price action have we had? Well, we had a consolidation. We dropped down here and made a lower low, clearing out the liquidity below here. Then we moved into a consolidation here. What did we do in this consolidation? Well, we just trapped a bunch of orders. So people sold it here thinking that the market's going to continue lower. It stopped right before this low, and everybody's buying it thinking that this is going to be the low. So they buy it here, they trail their stop loss under these lows, they get stopped out here, right? So this consolidation is not what I'm looking to trade within. So anytime I see this consolidation here, if we really map out the whole thing, it would be from that high to that low. Okay, so what I mean is the market is just moving between this high and this low. It's just consolidating within that. So it's moving in a range between here and here. When would we want to step into this market? The moment we see buying or selling come into the market. So as we're trading in this consolidation, we're not doing anything. Once we see the market break away from this consolidation, then we can start looking for buy setups. Because at that point in time, we know that the market has proven to us that it's wanting to go higher. Now, the question that you may have is, where is the market likely to go? Well, if we look at what we've done, we had consolidation, we dropped down, and then we went into another consolidation. So once we broke out of this consolidation, that should indicate what to us? That this low here, or this low, either of these lows, but they are significant lows, meaning the market, once it formed this low, it got away from it quickly and it couldn't trade lower than it again. Okay, so that should indicate that this low will likely be a longer term low in place. Once the market breaks away from that, our eyes have to look left and figure out where is the liquidity at in the marketplace. It's going to be resting above the nearest swing highs and swing lows in the marketplace. So if you're looking for buy setups, you're going to be looking for the nearest swing highs. So we have this swing high here, because remember, what we're looking at is we're looking at the market here right as it broke out of this consolidation. So we have to look left and identify where is the most recent liquidity. Well, we've got a swing high right here. We also have a swing high right here at 3050, so we can mark that out as well. We'll just mark out every single one. So we've got a swing high here, another swing high here, and then we've got another swing high here. So these are going to be all of our targets. These are all going to be levels of liquidity that we're going to expect the market to reach for. So what does that mean? These are all going to be our take profit levels that we could frame buy entries around, and where we would be targeting. Okay, so notice I've marked out each swing high, swing high, swing high, swing high, swing high, swing high, swing high. And if you don't know what a swing high is, just go ahead and click the little card. I'll put it up in this video right now. Just click the little card. It'll take you to a video where I explain everything about swing highs and swing lows so you can understand that better. So after we mark out the swing highs, and we know that that's our targets and where we're going to be looking for the market to go, we have to be looking for potential buy setups. And I always tell you guys, frame frame your trades off of the higher time frame. So what does that mean? Frame your trades off of the daily time frame, the 4-hour time frame. You don't want to frame your trades off of the 15-minute or the 5-minute. Okay? So again, what I mean by that is you want to look for your daily and your 4-hour support and resistance levels. So let's look at a few things here. The market broke out of the consolidation here. So we have to look left and see where is the previous resistance that could become support. So we have this high here, which was old resistance. We know that because the market formed a high and then sold off. So it acted as resistance. Once it breaks above it, it should act as support. Okay, so what we can do is we can mark that level on our chart here, and we'll actually make this a thick line so we'll be able to recognize it, and we'll make this blue so we know that it's different from our targets. All of our target lines are red, and we're going to delete this consolidation now. Well, actually we're just going to make this a light color, like a light gray or something, so we know that it's there, but it doesn't necessarily draw our attention to our eyes. So let's go ahead and look at the first potential setup that we could frame, and that would be here. Okay, so as the market breaks out here above this old high, which is old resistance, it should now act as support. So you can see the market trades right back into that, acts as support. Where would you target? The nearest swing high. So if we look at that, from here to that high is 275 pips. Okay, so imagine the 20 pip setups that you could find within this move from here to here. It looks small right here on a daily time frame, but this is 275 pips. So now what I want to do is we're going to go break this down, and we're going to really identify all the different opportunities that we could have got on board this market until it got to this swing high back here, which comes in at 3058. The high on this candle comes in at 3047. So it came 9 pips shy of that actual level. What I teach you guys though, and what I learned from ICT, is you do not wait for your level to get hit. You always want to close anywhere from 20 to 5 pips early. So for me, I usually like to close anywhere from 5 to 10 pips early, and that's a good number I would recommend for you guys to use as well. As the market's approaching this 3054 level, you want to be taking your profits at 3040, 3045, 3050. So you see what I mean? You're scaling off portions of your profit as you're approaching that level. So you don't have to, it doesn't have to necessarily hit that level, right, for you to be right, but you can make money on the way there. So let's highlight this box, and what we're going to do is we're going to identify all the different opportunities that we could have got on board this market for a buy setup up until this level at 3054 was obtained. So we're going to drop down into a 1-hour time frame, and we're going to have to go back a good little bit till we find that. So that was here. All right, and let's go ahead and look at the different opportunities that we could have took part in within this blue box for buy setups on the way to our 3054 level. All right, so look at how the market gives you one opportunity, which is, this is the blue line. The blue line is the old resistance acting as new support. So initially the market trades into it. If you're someone who, you trust your pattern, all that, you can enter it here. Okay, if you're someone who needs a little bit more confirmation like myself, then I'm going to let it do its thing. So I'm going to let it just kind of consolidate basically, but you can see here we formed a higher high, higher than this high, came back, formed a higher low, formed another higher high. So I probably would have entered somewhere around here, and my stop loss would have had to go down here below this low. So it's a significant stop from where we're at, 268 pips, but think about the target. The target is 275 pips. So it's 1 to 1. That's where my initial stop loss has to go though. If I put it right underneath here and I would have entered the market on this trade down, I would have got stopped out on this move. Okay, and that is that way for a reason. A lot of retail traders were buying here, so they brought the market down one last time to clear their liquidity out before capitalizing on their longs. So my stop had to go here initially. Up until the point that we break above all this consolidation, then I can move my stop loss to this low. Okay, so then at that point, I would only have a stop loss of about 50 pips or so. Okay, so that's how you would reduce your stop, but you have to wait for the market to get above these highs. So what I mean by that is the market's trading sideways in here. The market eventually pushes above it here. Once that happens, you can simply use ICT order blocks right here, down candle before the move up. As the market retests that as support, you can buy it there and you can place your stop loss below the previous swing low, which would go right here. So now let's identify how much tighter your risk is there. You have a 20 pip stop loss with a 200, let's map it out exactly, with about a 200 pip target. 20 pip stop loss for a 200 pip target. Okay, most of you are trying to trade within this consolidation. That's why you're failing. That's why you're losing money. They engineer these consolidations to take your money. You have to wait and be patient for them to show you that they're leaving the consolidation. Here they do that. They retest what? ICT bullish order block. Buy setup. Buy it. Target what? 3054. Okay? So think about the other opportunities that you've had if you miss this one here. Well, look at the swing. From this low to this high, what happened? The market broke structure. The market made a higher high, higher than the previous highs, right? So what would we expect then? Well, the market should trade into one of our fib levels because that should hold as support. Does it do that? Trades down, right into 61.8. Buy it here. Entry opportunity number 2. Market pushes higher, ultimately trades back down one last time, gives you 79% and 70.5. So if you missed it here, another entry opportunity here. Still targeting that 3054 level. So you had one entry opportunity here. Let's actually highlight these so we can identify the actual opportunities. So one here, as the market broke out, traded down into this ICT bullish order block. That's one entry opportunity. That's where I would have entered. So in this consolidation, we also had entries here. So we had one entry there as it retested the daily support. We had another entry here as it retested the daily support. Another entry here as it retested the daily support. Another entry here as it retested daily support. Another entry here as it retested daily support. So all of these are potential entry opportunities. I just don't like waiting through consolidations. So I wait for this. Market trades above it, retest ICT bullish order block, buy it. Stop loss goes below previous swing low. This usually gives me the tightest risk. That's why I like these setups. All right, so we can draw our fib from this low to this high. Notice what the market does. Trades right back into 61.8. Where is your stop loss at this point? Still below where? Here, right below this low. Why is it below this low? Because this is the low that led to the swing that broke market structure. So your stop loss has to be here. So that's why this would have been the initial entry. If you missed it, you have to wait. You don't want to be chasing price as it's pushing up here. Most of you are trying to buy price as it trades up down here and you only catch this little portion of a move. And that's fine. You can do that too. This presented what? 60 pips. So there's plenty of opportunities within these larger moves, but you have to work from the daily time frame. Most of you are trying to start with these lower time frames and you can't accurately trade from there. So even, 1, 2, 3, 4, 5 entry opportunities here, 6, as the market makes another higher high and trades right back down into what? this old high, that could be another entry opportunity. It's all based off of what you can see easiest in the market. Okay, what do? Consolidate again, break out. What do? Retest ICT bullish order block here, another entry opportunity. So all of these opportunities are providing way more than 20 pips. Even if you just bought it here and took profit right here, 57 pips, 60 pips, 50 pips, 50 pips, right? So there is tons of opportunities. Most of you guys just struggle to see them because you're operating off the 15-minute time frame and you constantly see the market going up and down, up and down. And then you're like, oh, I need to switch from buying, I need to switch from selling, I need to switch from buying, I need to switch from selling. It doesn't work like that. You have to focus on where the daily direction is going to be. So we're already expecting higher prices on the daily. Now look at all the opportunities that we could see, and this is just a few. There's plenty more in here. So we can highlight here 61.8. We can highlight here 70.5 and 79%. The market trades above this old high here. So on this trade down and retest, you could have bought it again here, although I wouldn't have recommended it being so high up already. It could have provided another buying opportunity. But the point is, I'm pretty sure that you guys can see that there was multiple opportunities. Look, we traded down again. Where did we trade back into? This level here. What is this level? Our daily level. Market pushes up, trades back down into what? ICT bullish order block. Market trades up, trades down into what? Down candle, ICT bullish order block. Okay, so just know that there is plenty of opportunities to get on board trade setups. Most people are just operating from a 15-minute time frame, and they just purely expect to know what they're doing from looking at that. So I hope this video helped you guys. If you enjoyed it, make sure to leave a thumbs up. And if you have any questions about anything, just drop a comment below. We can start a conversation in there, and I will talk to you guys in the next video.
After this track, I might need me some lozenges. I ain't about to go soft. This rapping shit lately been pissing me off. Guess these words are kinda just at the tip of my tongue, but I'm still young and I hope I find the rhymes that'll live through time before that fat lady has sung. Cause when I'm inside this booth, feels like I rule the world. But I'll hop off my horse, hop in your Porsche, give it a